think we've probably got all bases covered. And as you probably know, I'm Tim Ash. I'm also was an analyst for 20 years doing the job that these three people do, covering Ukraine, etc. But now I'm on the buy side, so now I'm an investor. So to make it slightly different and more slightly interesting, what I thought I would do is ask our three sell-side analysts to pitch to me, which is a little bit strange, but you know, what is the story that you're selling to your institutional investor base about what you should do in Ukraine? You know, what are the pluses, minuses, you know, but ultimately, you know, is it a buy, sell, hold? You know, it's very interesting on the back of the, you know, Ukraine did the 3 billion Eurobond deal. You know, I guess you three all had a view on that. But basically, what is the story that you're selling to people like myself who make big decisions about whether or not we invest in Ukraine? So on that note, let's start with Sergei. First up.
Okay. Can you hear me? Okay.
Yes.
Tim, thanks very much for the introduction. Well, I mean, it's the continuation of the theme that we had in the previous panel in a larger room, where the glass is half full or half empty. I would say that on the macroeconomic stability, at least in the near term, it's definitely half full in my view. I've had some meetings in Kiev before coming here, and Ukraine seems to be enjoying sort of a nice period when, because global markets are extremely supportive. They had a very successful placement of new securities, extended the curve, dealt with the front concentration of the redemptions at the front, and according to published comments from the minister, are considering doing more going forward. So clearly, there is very strong technical support for Ukrainian assets, especially given that despite sort of the somewhat unexpected details of bad announcements last night, we're still in an environment where sort of any high-yielding emerging market sovereign with a positive credit trajectory is in high demand, and that's exactly what Ukraine is at the moment. But people following Ukraine over time would clearly notice that it is prone to cycles, and political cycles are extremely important because it's a very open place politically. So the window for advancing reforms is not wide. I would say whatever is not done by middle of next year is probably not going to be done through the end of the election cycle at some point in 2019. And again, as we all heard earlier today, there are glaring sort of issues on the structural reform side. Of course, land reform is the most important move going forward in order to improve productivity in a key sector, agriculture. But other reforms, including issues to enhance governance, which is, of course, directly related to the proposed anti-corruption court and other measures. We heard earlier today that the government is advocating, hopefully, alongside and not as an alternative, creation of a financial watchdog or some sort of an entity that would look close into irregularities through financial means. And you know, we have to watch it very closely then, because Ukraine was meant to get a $2 billion tranche before the end of the year. Now we have some concerns about the timing of the tranche, because clearly IMF is having a second thought about the commitments that were made earlier, including on gas tariff adjustment. And frankly speaking, getting a second tranche after that doesn't appear particularly likely. So I would say that Ukraine is still a buy. You have to be selective kind of in terms of assets. You have to look at the curve. Probably if, if global risk appetite may start waning at some point, then the longer dated securities look a bit more vulnerable to potential correction. Also, if there is more liability management going forward, then I think Ukraine will continue issuing into the long end of the curve. And in terms of warrants, it's a function of many factors. The exchange rate trajectory has changed. The growth figures are not bad, but not sufficient to generate even the sort of valuations that would justify the kind of high 50s prices. Clearly, there should be a much more sustained pickup in growth and based on both reform and macroeconomic stabilization to get into levels that some other people in the industry consider warranted. So it's a buy, but I would say it's a cautious buy. At some point it will become a speculative bet, and I would say closer to end of the year, maybe beginning of the year, when we should expect decisions on what exactly the appeal on the Russian $3 billion bond would come up with. I would probably take some risk off the table.
So it's come a long way in a short period of time. I mean, yields have really collapsed over the last 6 months, but you still see value and a bit of momentum behind it, would you say?
Yes, because it's not easy to find a credit, another credit in the time zone, which still maintains the positive momentum and offers the yields comparative to Ukraine,
okay,
regardless of the ratings, which still are low. I mean, the CAA rating, from Moody's is a big impediment. I mean, some clients cannot even touch Ukrainian assets if they continue to be rated in CCC category, at least by one agency. So it's important that the government and central bank continue to work along the reform and stabilization programs and of course with the rating agencies so that the re-rating continues.